Hello and welcome everyone to Long Options. I am your host, Rachel Deschelle, Senior Manager of Trading Services. I am joined today in the chat by Kevin Horner, my friend and colleague here. Please chat in your questions, comments, requests during today's session. I'll be sure to keep an eye on those as we go throughout. And please give us both a follow on X as well. I am Rachel-CS. Kevin is Kevin Horner CS. We are both pretty technical when it comes to posting charts and things like that on X, so definitely give us a follow there. And please like this video and subscribe to our Trader Talk Schwab coaching on YouTube. It's a new year, new you. This is time to really take a look at that past year, see how we did by sticking to our plan. That's what we're going to talk a little bit about today, with really sticking to our plan, putting objectives on our trades, and trading within a specific account size and trade risk. So now, if you are not familiar with options already, you are more than welcome to stay in this class today. We kind of make the assumption that you are familiar with option buying strategies. We do have a Getting Started with Options playlist in addition to this one. So before we dive in today, let's start with some important disclosures. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover here is for educational purposes only and should not be considered any type of recommendation or advice. And we are going to cover the Paper Money software application. Keep in mind that there are a few differences between Paper Money and Live. Now, as far as our agenda for today, we are going to start with a market overview like we always do in this class. We are going to go through and discuss the concept of long options. We're going to discuss those concepts of price, time, and volatility and why they are important with option pricing. And then we're going to go through and place paper money trades on the platform. We're going to follow up with those week after week. So that is our agenda today. Let's dive into the platform and just take a look at what the markets are doing, because there's a few notable things that are happening today. So just starting with the S&P 500 here, we definitely see that we are still a little off from all-time highs here since this recent uptrend. So we didn't do too well during that Santa Claus rally period, but we are having a good kind of fresh start here to January with a couple days trading in the green. I'm going to actually change your perspective on this chart a little bit as well, just by switching this style from a candle chart to a line chart. And if we close around where we're at today, this would be the highest close on record for the S&P 500. And we remember, as traders, the closing price is always most important. So looks like we are in the green so far there today, but always things to watch here as we kind of close in on those all-time highs. A couple other charts I think that are important with the overall market is the Dow Jones Industrial Average. The Dow Jones Transports looks very familiar to this as well, but this is one of the major market indices that has really led the way to the upside versus the S&P 500 and the NASDAQ, which are both very tech weighted. This, since it's a price weighted average, the heaviest weighting is really in those financials. So that's kind of what we're seeing here, especially with this pop in the financial sector. We do have the Dow Jones Industrial Average leading the way. I will say, though, it is noticeable that the S&P 500 equal weight is actually making its way to all-time highs. So that could speak more to the rotation story that we are seeing under the surface of the market. We're seeing the index kind of still hanging out in limbo here and not quite making all-time highs, but we see the equal weight just really powering through after retesting that 20-day moving average there in blue. So that's our market overview. Now, just to kind of kick this year off, we are starting with a brand new fresh account. So we're not going to review any previous trades that we placed last year because we are wiping that slate clean. So we are starting with an account size of $200,000. And for our trades that we're going to look at, we're going to keep in mind some of our position sizing rules, which is we only want to actually risk 5% of our account in the trade. So that's going to put our cap at The amount that we're going to place into the trade is $10,000 here. So I have the rules over there on the left. And then the amount that we're going to risk in our trade, which is essentially where our entry is versus where our stop or our downside exit is for our risk management, we are only going to risk about 0.5% to 1% of the account, which puts us in a range between $1,000 and $2,000 that we're essentially going to risk within that trade parameters. So that's going to give us some rules or parameters that we're going to focus on today as we build out these trades. And these trades that I found today, while there are a lot of pretty charts out there, today we are going to focus strictly on trend trading and momentum trading in this case. So I pulled up a couple charts here. There are a lot of great ones that, great looking charts, but they have earnings coming up, which is something we want to keep in mind as options traders. So we kind of filtered that list for stocks that are trading on a uptrend as well as have strength and momentum as well. So a couple of those examples I'm going to bring today. We're first going to look at FedEx. We can see that FedEx has definitely had a kind of like a massive formation this year where it recently broke through the recent level of resistance right around 285 or so, kind of this zone that we saw earlier, almost a year ago now, and really recently retested that breakout zone, that old resistance, now new support right at that 20-period moving average. And since it's moved decisively higher from that level, we can see it's almost forming this candlestick pattern that we typically see at lows, which is those three white soldiers. They're essentially three really big green candles that typically forms at the bottom of a market here. So we're seeing that lead the charge higher. So the trend is up, obviously. There's no argument in that, but let's take a look at momentum. I'm going to add the relative strength index down below, the RSI, that's going to give us kind of that signal of momentum and put us on that oscillator really between 0 and 100 with those levels of overbought at 70, oversold at 30 there. And we can see with the breakout of resistance, we are also seeing strength and momentum here with overbought levels in the RSI, which is something that bullish traders do want to see with breakouts there. So in this case, since our bias on this is bullish, we have a strong trend, we have strong momentum to the upside, we may be looking to take a long call position to really take advantage of that move to the upside in FedEx in this case. So a couple things. One, I already mentioned that we want to go through our long call checklist, our long options checklist at this point is one, just keeping an eye on where earnings or any type of major announcements or events do occur, because likely a lot of times with those, we do see that influx in implied volatility, and we know with increasing implied volatility, it's going to make our options more expensive. So typically we want to buy options in a lower implied volatility environment. So we know that there's no upcoming earnings. We just had earnings last month. And if I just hide this relative strength index right now and show the implied volatility, it'll show us where implied volatility has been over the last year and where it's really hanging out now. And we could see, just if we look at where these lows really took place over the last year, we are at some of the lowest levels that implied volatility has been. And we know that volatility is mean reverting. So these low periods of volatility tend to switch to high periods of volatility, but our option prices typically will be a little bit more compressed in this case. And that's kind of the first thing that we're going to look at when we take into consideration our strategy for options. So trend, momentum, we're looking at implied volatility. Let's also take a note at the 50-period moving average that seems to be tested, or I guess the 20-period moving average that seems to get tested and held with each time. That we will keep in mind, because that's kind of like the 1 month moving average in this case. And we've talked about time till expiration. When we are buying options, we want a little bit more time. That 30-day mark is when time decay kind of falls off that slippery slope there and tends to get larger and larger and larger the closer we get to expiration. So we want to keep that in mind as we're selecting our strategy as well. So let's move over to the trade tab here. We already talked about how we wanted to buy a call in FedEx. We may want to give ourselves a little bit more than just the 45 days, since we did talk about like that 30-day mark kind of being that really kicking that speed to a higher level as far as time decay. So let's look out to the 20th of March here with 73 days until expiration here. So I'm going to open that for us here. And I'm just going to expand the left sidebar in this case. Okay, so we want to look at the call side, which is over here on the left. We can see our in the money options here are shaded in the background in purple. And we've talked about in this class, when we select an option strike, there's many different ways that traders could do this. But one of the strategies that we've really stuck to in this class is looking for an option with a little bit of intrinsic value. We want an option with a little bit of a higher delta than 50, so that kind of tells us that based on a $1 move in the stock, that is theoretically how much our option is going to move. So in this case, I want to look at an option that's slightly in the money, maybe the 290 option here in this case. And I can see right now, it looks like the delta on that option is 66 cents here. So that's going to say with $1 move up in the stock, our option's theoretically going to move up 66 cents. That kind of gives us that directional play there. Now, if we also take a look at theta or time decay, which we kind of talked about just with selecting the expiration date, our time decay that we're going to see on this option theoretically with each passing day is about 11 cents. So that's what that's going to give us there. Now, if we look at that Vega, so V for Vega, V for volatility, that's going to tell us if the implied volatility of the stock goes up just 1%, theoretically the value of our options should increase by about 49 cents there. Same in the vice versa. So if it goes down 1%, theoretically our option price should go down in that case. Another thing we tend to look at is that we talk a lot about in this class is just this level of liquidity. First, we kind of take a look at the bid and ask. Then next, we take a look at the volume and open interest. So one of our rules is making sure that that spread between the bid and the ask is less than 10% of that overall option. So it looks like we are in the clear there, as well as having a little bit of volume, little bit of open interest in this case. But the biggest kind of source or indication of liquidity is just looking at that spread between the bid and the ask in this case. Okay, so let's take a look here and maybe look at how we could craft this trade. So I'm going to just right click on this option, go to buy custom with stop limit. And I know before in this class, we have looked at OCO brackets where we place a profit target to the upside. We're not going to do that for this trade today. We're just going to place a stop limit to the downside to mitigate some of our losses should this go in the opposite direction. Because we want to ride with the trend, we want to ride with momentum. So once we see that bend in the trend, which we can look at a couple levels again on support and resistance where we could set alerts, that's kind of what we want to keep in mind is what the overall stock is doing with trend and momentum here. So if I just take a look here, we talked about how the account is worth, or I guess we are looking to place about $10,000 into each of these trades. And right now the price of the option is $25 in this case. So I'm just going to go with 4 contracts in this case. And we could see here on the confirm and send, it does the math for you. You are in total risking $10,000. So The premium of what we are paying there multiplied by the number of contracts, that is our max loss on the trade. That is the total amount that we are risking in this trade. Now, as far as our trade risk, this is something we want to calculate with that stop limit here. So I'm going to make these both good till canceled. And we've talked about the stop limit as well in this class. Remember, the stop comes first. That is the activation price on the option. And then our limit order comes next. So once that activation price has been met on that next tick is where our limit order is going to be sent to the market. So we've talked before about how we want that limit order to kind of act as a little bit of a buffer, placing that a little bit below the stop in this case. So I'm going to make a rule here on this particular option, and I don't want to risk more than 15%. So I'm going to take $25, which is our entry price there in that case. And I'm going to take that multiplied by 0.85. So that's going to give me what the price of the option would be if I had a 15% loss on this option. So that's going to give me a price of $21.25. So $21.25 here. Okay. So we're going to do some quick math and see if that is a tight enough stop for us that stays within the risk parameters of our account. Because we talked about how we only want to risk within a trade $1,000 to $2,000 in this case. So if I take $25 minus where our stop order would be, which is $21.25, I get 3.75. Of course, I'm going to multiply that by the number of shares I'm controlling here in this case. And that's going to give me, okay, so that's $1,500 in that case. So that stays right within our parameters here. Now, let's kind of look at a couple different things that we've also talked about. So let's remember that the stop is going to be triggered off of the asking price of the option. So we got to keep that in mind when we're forming this stop order. So this is going to be activated off that asking price, which is always higher than that bid price. So keep that in mind there. Just keep that in mind if you are using this order. Look at the width of the spread to where you would want to place your limit order to the downside in that case. So we're just going to place this at $21.25. We're going to place the limit a teeny bit lower. Let's place that at $20.70 in this case. So that gives us, or we'll actually go $20.50 in this case. Give it a little bit of space since it does have a 75-cent wide spread right now. So this is going to trigger off of the asking price. The order that's going to be sent is a sell limit order for $20.50 or better. So that is the order that we are looking at here. In this example, we're going to hit confirm and send. Just double check everything in this case. We have our stop limit at our 15% loss. We have our entry there, and I'm going to place this in our long options account there. So I'm going to hit send. Okay, perfect. So we just got to fill on that one there. We're letting our profits ride. I see Fib Zone Shawty said, we riding that wave. Yes, we are. We are riding that wave. Okay. So looking on the chart, you may wonder, because I'm going to kind of go back to this. A technician or someone that is looking at this chart kind of may wonder in the long term where we may see certain levels of resistance. And you could look at that a number of different ways. You could look at that by zooming out a little bit on the chart and seeing if there's any other long-term levels that are kind of coming up here with the short term. So we can kind of do that first. And we can see if we just zoom out a little bit here, we see another long-term level coming up here around like 309, 310 or so. And then the next is those all-time highs around 320. So we're kind of getting close to that level. That is where we may If the price continues, we may look to take some of our profits off in that case. So that's kind of the one thing you could do. If you see that you're making new yearly highs, you want to zoom out a little bit, take a look to see where price could possibly run into a little bit of supply in that case. Let's just say this stock is making new all-time highs. You zoomed out already, you already looked back, and there's no other levels of resistance that you could possibly see in the long term. Well, that is where those Fibonacci retracements kind of come into place here. And a lot of times what traders do is they may take a recent high of that period and draw it to the recent low of that entire period. And it gives them a few resistance levels to the upside where they may place as their profit taking orders there. So that's just another example of how you could look for profit targets in this case. If you zoomed out, there wasn't any in the long term. So let's take a look here. I'm going to look at the chat. Can we please do a leap? We won't today, but we will in the coming classes. So you'll just have to come back. Let's see. I had another question based off of should the stop limit be good till canceled? Yes, I set that good till canceled for us there. So that time in force, you can see in the working orders, we made that good till canceled. And then Jay Taylor trades, yes, we are, I just mentioned that a minute ago, we are likely going to see, if the price continues to move up, we are likely going to take profit at that level of resistance, probably around like 310 or so, if it continues to move past that level. Because in that case, we could probably take off half of the position, lock in some of our gains, and let the other half ride. So that may be what we do in that case. Let's see what else. Yeah, leaps are coming, you guys. Leaps are coming. Stay tuned for that. So this was our first trade. Let's move to the next one of another momentum trend burst that I watched today. And we see Rocket Lab in this case. So Rocket Lab recently broke through resistance with a breakaway gap. Then it retraced that level, kind of came back and retested that support zone, almost as if it was an exhaustion gap in that case, and then moved higher to form these new all-time highs. And these last three candles look very similar to what we just saw on the other chart as well, where we're seeing these big green candles that are forming right here after a pullback in price. It also looks a little bit like a flag pattern in this case, where we had a little bit of a pullback here, a little bit of a consolidation, and then we just had that burst move higher. So that's another kind of thing I am seeing on the chart. If you're seeing the same thing, definitely holler out. If you're seeing a different pattern formation, definitely make mention of that. But here we see the trend is strong. And another thing we're going to add, we're going to hide that implied volatility. We're going to add the RSI in this case, and let's look at momentum. Well, we do see momentum reaching these levels of overbought, showing a strong momentum here in this case, making higher lows on the RSI. And that is something that a lot of bullish traders who are long the trend, but also looking to be long momentum, this is something that they tend to look for here, is that confirmation. Now, if price was making, let's say price was making these higher highs, but momentum was down here, the RSI was down here making lower highs, that may give us kind of like a cautioning signal in momentum that, hey, this trend may take a little bit of a breather. It may stall out a little bit. It may find a little bit of rest or consolidation here, but we are not seeing that in this case. So momentum is really confirming that overall trend to the upside here after we had that support retest there. So let's look in this case, since it does look like a bullish setup, let's look to buy a call with this option as well in this case. So one of the things on our checklist that we looked at before was upcoming earnings, events, things like that. We don't have any upcoming earnings here. The next one we have is all the way out in late February, so we're safe there. Okay, now we're going to look at implied volatility as well and see where it's been over the last year. So there's definitely been periods of higher volatility that we've seen, but in this case, I would say it's definitely in the lower half of where it's been over the last year in that case. Now, let's take a look at the trade tab and just kind of keep in mind some of the same things that we talked about on that last option as well. So we're going to look at the same amount of time, 73 days out from expiration. That's a little more than 2 months there. We also see that the implied volatility percentile, while it's a little bit elevated, it still is in the lower half of where implied volatility has been over the last year. And we know volatility kind of works in both ways, right? So we can see that increase in volatility on a move to the upside. We can see that increase in volatility on a move to the downside. So that could kind of speak to a little bit of the elevated volatility that we're seeing here just with the last few days with some of those really strong moves that we've made in Rocket Lab here. So I'm going to collapse the left sidebar. We're going to look at the same things we looked at last time with just kind of picking and choosing our strike price and crafting out our option trade here. So we're going to look for an option that is slightly in the money with a little bit of a higher delta to give us more of a move should that stock move in our direction. So I'm going to look at the 75 strike option here. I see that it has a delta of 68 cents. Remember, $1 move in the stock, a 68-cent move in the option theoretically is what that's going to mean. We have a little bit less time decay. We only have about 9 cents of time decay per day. And if volatility goes up or down, we are only going to see about a 13% move per 1% move there. Don't have to worry about liquidity here. We have a very tight spread here between the bid and the ask, less than 10%. We can also see the level of volume and open interest, especially the volume today on some of these contracts. So what I'm going to do is walk through the same thing that we did before. We're going to right click on this option. We're going to go to buy custom. We're going to use a stop limit in this case. Okay. Now again, we have $10,000 that we could put into the trade. So how many contracts do we want to go? We're going to lock these together and let's just take a look here. Let's see what 10 contracts looks like. Whoops, that is way too many. We're going to look at, we'll try to do one more. We'll do 5 contracts here. So we're still going to stay within that $10,000. Remember, our max loss is what you are paying for the options. The most you can lose is the premium that you pay. So you take that premium, you multiply it by the number of contracts or the number of shares you're controlling. That is where you get that max loss in that case, okay? And let's just kind of keep those same parameters that we were looking at before on as far as a 15% stop loss in this case. So if we take 1835, which it is our entry price, we take 1835 times 0.85. That gives us what our price would be if this option lost that amount, lost 15%. So now I'm going to take 1835 minus 1559, multiply that by 5, and that gives us a trade risk or kind of parameter here, still within that 1,000 to 2,000 at roughly 1380 or so. So we're going to put our limit a little bit below the stop in this case, because remember that stop or that activation is going to trigger off of the asking price. We want a limit price that's a little bit below that to especially catch it in a down moving market in that case. So we're going to make sure these are the same. Okay, so everything looks okay there in this case. We have the good till canceled. We have 5 contracts. Whoops, this is 50 instead of 15. This is why you review your order so many times. Sometimes you catch it on this screen, sometimes you catch it on the next screen, but that's why they say double check, triple check, maybe even quadruple check your orders. So we definitely want that limit a little bit below, not so far above in that case. So I'm going to hit confirm and send here double check everything one more time and go into our long options one there, hit send. Okay. Now let's go back to the chart. Where could we see a possible move to the upside with Rocket Lab? Well, let's do the first thing we did before. Let's zoom out, let's take a wider look. Obviously, we are making new all-time highs in Rocket Lab. So let's just do something that we just talked about recently. Let's use those Fibonacci retracements by taking the recent highs to the recent lows in this case. And that should give us, if we just kind of pan our way down here on this scale, that should give us a couple resistance levels to the upside. The first one being that 96.47 level. So that is going to be the level we are going to watch. If we do see a possible retracement or yet another support retest, we'd probably be looking right around here or so, kind of at the 100% kind of where we started out. By then we would likely be stopped out in that case. But to the upside, we're going to be looking around 96.47. Again, just like the other trade, we want to let our profits ride. And if we do hit an area of resistance, we'll take some off the table. Okay, let me check the chat because I know you guys have been active in there. Shout out to Kevin answering a ton of questions. Okay, so I do have a couple ones here. So how do you screen to find these stocks before they take over? So I've told you guys, I just look at a ton of charts. I do a filter for listed stocks with over 1 million shares traded. I kind of filter out earnings in the upcoming 30 days or so. And that's kind of how I get to some of these kind of setups here is just by looking at various charts. An easy way though is to just start with even the Dow Jones Industrial Average or start with the S&P 500 and sort it by market cap. You can look at some of those largest cap companies if some of those are ones that kind of catch your eye. Or I know in previous webcasts and in future webcasts, we will definitely cover scans where we can screen for retests of moving averages, resistance bounces, breakouts, things like that too. So short story long, I look at a lot of charts. That's how I found these ones. Let's take a look at here. Let's see. Okay. So I don't see any others in this case, but I think we have time for one more trade here. One more trade. So let's take a look at eBay. Okay, I'm going to take a look at eBay here. You guys tell me what you are seeing on the chart in this case. But what I am seeing here is we had this massive double top pattern that looked like it broke down through this level of support, this support zone right around 87 or so. Once it gapped down through that, it looked like it tried to reclaim that level, test it one more time, go back to those period lows, and then just recently it broke through, just in the last 2 trading sessions, broke through that level of resistance decisively, while simultaneously giving us a golden cross signal with that 20 period moving average crossing above that 50 period moving average. So for you, those of you that are looking for these type of technical setups, it's just a really easy study filter that you could add where you just put in the conditions of a 20 period crossing above a 50 period moving average within the last 2 bars or 3 bars or so, and then kind of putting some of those other filters, maybe like IV percentile or doesn't have earnings in X amount of days if you kind of want to avoid those too. So in this case, this is going to be another bullish example trade because the next level of resistance that I am really looking at here as a trader is this level around 96.47, because this entire gap that we saw here acted as resistance. We've already penetrated that quite a bit here over the last 2 sessions. We're about to see a second close really above that line. So that is what I will be looking for as a trader in this case. If we break through that, probably looking at that neat round number around 100 where we saw those yearly highs resistance here as well. Okay. So let's go long a call in this case with eBay. And let's take a look at some of the things that we did before. One being no upcoming earnings within the next month and a half or so. Still relatively muted levels of implied volatility. We're going to kind of follow that same process as we move over, look at the same number of days out from expiration. And I'll kind of scroll down here so you guys can see the IV percentile as well. It's really right near the lower third of where it's been over the last year. So still relatively inexpensive options as far as volatility goes. But as far as the time to expiration, again, we're going to look at roughly 2.5 months out from expiration. We're going to look at an option that is slightly in the money with a tight bid-ask spread in this case. So I am going to look at, let's take a look here. Let's look at this 90 strike call here that we have for eBay. Okay, so we have a spread between the bid and the ask that is still less than 10% here. We're looking at volume, open interest, so we do have a liquid option in this case. Also kind of reviewing some of the same things we did before. We have a delta of 58, so that's going to give us that 58-cent move on every theoretical dollar move in the stock. Obviously, that's going to get greater and greater if the stock moves in our direction, and that's really the result of that gamma, essentially. So that's really our gas pedal. So every time our stock moves in our direction, our delta is going to incrementally get greater and greater, and that's just kind of the force of that gamma, which we don't talk about too much in this class. We only have about 4 cents in time decay here. Makes sense because we do have a cheaper option in this case, and just a little bit of volatility shift as well. So every 1% change in implied volatility, we have that 16 cent theoretical move in this case. So let's just go through the same thing that we did before. Right click on this option, buy custom with a stop limit in this case. And let's see how many contracts we can look at in this case. Let's go up. Let's see. Okay, so that will put us, let's go up one more. We'll do 14 contracts in this case. We want to make sure we're still using the position size of our account. That puts us right under the $10,000 that we are risking in this trade. We see our max loss is just under that number there. That is the amount that we are risking. We're going to go back, use our same stop parameters that we did before by looking at a 15% loss in the option. So I'm going to take $7, multiply that by 0.85. That gives me $5.95 here. And if I take $7 minus $5.95, multiply that by 14, that's about $14.70. So that still stays within that $1,000 to $2,000 that we are willing to risk in that trade. We're going to place our limit order a little bit below here. Let's just place this at 560 in this case. Remember that stop is going to be activated off of the asking price of the option. Our limit's going to come in below to say we want this price or better. In this case, this price or higher. And we're just going to now hit confirm and send. We're going to double check our order here. And let's put this in the long options group here. We're going to hit send. Okay. And yes, I do have a link for a past LEAP session. I'm going to put the most recent link that I did here for you guys. We are going to cover LEAPs again. That video just goes in a little bit more depth. So I always keep that link top of mind since everyone's super excited about LEAPs. So don't worry, they will come. They will come. Let me look at the chat to see if there is any other questions that we have about our trades today. Let's take a look at that. So Chris had a great question as far as A trader might expect eBay to retest the breakout level. How would you be sure your stop price is not too close to that using a stop based on an option price? So a couple different things here. And yes, you're totally right. So it kind of places that theoretical stop where it would theoretically fill kind of by the price of the stock in a sense. So in this case, we're kind of looking at theoretically, it's looking like it would be right above that breakout level. It all really depends on the volatility of the underlying stock and the liquidity of the options. So that's kind of how it's going to depend. One thing that you could do is use that Theoprice tool. So pick out a support level that you're watching, which may be, let's just say it's $88 or so. So $88 is about $3 less from where the price of the stock is now. So let's just say over the next week, I'm going to pull up this Theoprice tool. Let's just say over the next week, what day is it? Let's say the price of the stock goes down $3, okay? This is going to give us the theoretical price of what our option is, which is $4.85. So in that case, that would stop us out of our option. So for you as a trader, if that is too close to comfort for you, you could lower your stop price. But keep in mind when we talk about the rules for our account, you may want to dial down the number of contracts in that case, because if you are widening out your entry price versus your stop price, if that kind of breaches your trade risk that you are willing to put into a trade, which in our case is that $1,000 to $2,000 that we are looking to risk, if it breaches that amount, you may have to dial down the position size amount just a little bit. But we are using a tight stop in this case, but really great question there, Chris. It's going to depend on multiple factors, but one thing you may want to do is just look at that Theoprice tool after really finding that level of support or resistance and really see what that move is and what the theoretical price of the option is, just based on that. So hopefully that helps. And then I do have another question on the percentage of profit that we are looking for in this case. So we would be looking to first target this $96, $97 level. So that gives us about $6 in this case. So let's just go and move this up $6. Oops. This will theoretically give us what the price of our option should theoretically be. So in this case, it's going to be more than a 50% gain. Let's just say if the price of the stock went up to that resistance level over the next week or so. But in this case, with all of these options, in the back of my mind, I am targeting a 20% gain within these options as well. But again, we're going to let our profits ride. We're going to trend trade, momentum trade some of these that we talked about and let our profits ride and watch these resistance levels coming up here. So we went through a lot today. We got 3 trades in today. It's a good fresh start to the new year. Really a time for new trades, looking at new rules, refining your process. So thank you so much for joining me today, for all your engagement in the chat. Shout out to Kevin for helping me so much with all the different questions, comments, everything we're seeing there in the chat. Please give us a follow on X. He is Kevin Horner CS. I'm Rachel-CS. Please like this video. Please subscribe to our Trader Talks Schwab coaching channel on YouTube. And I hope you have a great rest of your day. Later, traders.